All right, welcome to The Explainer. Today, we're diving into what is arguably the most transformative shift of our lifetime, artificial intelligence. But listen, we are skipping the hype today. We're getting right down to the actual, structural wealth creation opportunity for long-term investors. We're going to break down 10 specific Nasdaq and NYSE listed stocks that are literally building the physical future of this tech.
I just want you to let this number sink in for a second. $3 to $4 trillion with a T. That is the projected annual global data center capex by the year 2030. This isn't some abstract concept, right? This is the hard physical infrastructure required to meet this just insatiable global demand for AI training and inference. And the companies capturing all this spend, well, they're setting themselves up for absolutely explosive growth.
Okay, let's dive into this and map it all out so we don't get bogged down in jargon. First, we'll look at the trillion-dollar AI boom, then move into the silicon foundations, up to cloud and synergy, hardware and memory movers, the monetization machine, and finally, we'll wrap up with risks and long-term strategy.
Let's kick things off with Section 1, the trillion-dollar AI boom, or what we like to call the AI layer cake. So, to really grasp this massive financial shift, we have to stop looking at these companies as just random tickers and start seeing them as interconnected infrastructure providers. They are the modern-day picks and shovels of the AI gold rush. So here is our mental map for this explainer, the AI layer cake. Step 1 is the very foundation, the silicon and chips doing the raw math. Step 2 is hardware and memory, those physical servers and databanks holding it all together. Step 3 brings us to the cloud platforms, basically the digital real estate where it's all housed. And finally, Step 4 is the monetization machine, the consumer and enterprise software that's actually generating the end-user revenue. Now, before we bite into that first layer, keep this one crucial term in mind, CAPEX. You probably already know what capital expenditure is, but in the AI space, the sheer scale of the funds being deployed to acquire, upgrade, and build physical assets like these massive AI data centers, well, that is the absolute fuel for this entire boom. We're about to see exactly who is spending all that money, and more importantly, who is collecting it.
Moving on to Section 2, the silicon foundations, the chip heavyweights.
Now, what's really interesting here is the massive contrast between the undisputed AI kingpin and the high beta challenger. On one side, you've got NVIDIA. As of mid-2026, we're talking about a $5 trillion juggernaut still growing at triple-digit rates. This is driven by their massive CUDA software moat and those incredibly powerful Blackwell and Rubin architectures. Bulls are literally seeing a path to a $20 trillion market cap by 2030, which is just wild. They're sitting at a 20 to 32 times forward PE with a small 0.1 to 0.14% dividend. But then, on the other side, you have AMD, the scrappy challenger. They are dominating in CPUs, and they're rapidly grabbing GPU market share, somewhere between 15 and 30% with their Instinct chips. AMD recently raised its server CPU total addressable market to a staggering $120 to $220 billion by 2030, fueled by over 50% data center growth. It's a really high beta play with a bull target of over $1,000 a share before 2030, severely challenging the kingpin. But while NVIDIA and AMD are busy battling it out in the spotlight, we have this incredible stealth winner in the silicon space, Broadcom. Just look at this growth trajectory. In a recent quarter, they hit $10.8 billion in AI semiconductor revenue. That is a 143% jump from their past baseline. They are quietly building these custom XPUs for tech giants like Google and Meta, and they're targeting a massive $100 billion by 2027. And the kicker? They're doing all of this while trading at a really attractive 18 to 34 times multiple. They carry a $650 Morningstar fair value, they offer a solid 0.6 to 0.7% dividend, and they have incredible visibility through these huge multi-year contracts.
All right, stepping up the cake to Section 3, the cloud and synergy, the trillion-dollar spenders.
So these are the hyperscalers, the massive cloud platforms that are actually writing the checks for all that silicon we just talked about. And the numbers here are frankly staggering. Microsoft alone is guiding for roughly $190 billion in 2026 CapEx. But hey, it's working. Their AI revenue run rate hit $37 billion, which is a 123% year-over-year jump, backed by a massive $600 billion backlog. They're sitting at a 20 to 23 times PE with a 0.9% dividend and a $600 fair value. Then you've got Amazon, deploying around $200 billion in CapEx. That's funding infrastructure and their own custom Trainium and Infrancia chips, driving $15 billion plus in AI revenue and 28% AWS growth. And of course, Alphabet is right there too, investing heavily in infrastructure and showing incredible resilience by seamlessly integrating their Gemini models into search and cloud at a really attractive growth multiple. I really love this quote from the research. Microsoft offers growth plus income, ideal for balanced portfolios. Its shift to a cognitive utility could drive trillion-dollar scale outcomes. It just perfectly captures their wide mode strategy. They aren't just selling software anymore, right? They're becoming a full-stack cognitive utility. By leveraging that massive OpenAI partnership and their proprietary silicon, they're bridging boring, reliable enterprise stability with explosive AI firepower. It's a phenomenal combination of growth and reliable income.
Moving right along to Section 4, Hardware and Memory Movers, Building the Racks.
Now we're getting into the physical infrastructure layer. First up is high bandwidth memory, or HBM. As you probably know, without ultra-fast memory components, these intense AI data center operations just bottleneck completely. This makes a company like Micron Technology an incredibly attractive pure play in the supply chain. This tightness in the memory market actually drove massive 2026 stock gains for Micron. But even with that huge run-up, it's still trading at a low teens forward PE, with projections showing hundreds of % in near-term revenue growth.
And man, it is just wild to think about the physical server space right now. Dell Technologies stock absolutely tripled in 2026 on this outsized AI server demand, pulling in billions in AI revenue. And their next stop? Well, conservative models point to a potential $850 plus share price, all powered by a massive 34% compound annual growth rate for AI servers. When you combine that kind of demand with their strong projected EPS growth, like 78% in a single year, and a highly reasonable 5 to 6 times forward earnings multiple, it's just a powerhouse setup.
Let's head to the top of our layer cake with Section 5, the monetization machine, software, and ecosystem. This is where consumer-facing monetization and enterprise deployment actually happen. Just look at how Meta Platforms is utilizing their heavy $125 to $145 billion in CapEx. They're turning that directly into robust, immediate free cash flow. They're seeing 30% plus revenue growth simply by using AI to drive ad conversions and user engagement. They're trading at a 20 to 30 times multiple with a 0.35% dividend, and they are pushing the boundaries of future tech with their open-source llama models, AI agents, and smart glasses. They are a literal monetization machine. And to round out this whole ecosystem, companies like Arista Networks and Palantir are providing that vital, diversified exposure, giving us the crucial enterprise software and networking glue that actually lets businesses deploy all this AI power securely and efficiently.
Finally, let's bring it home with Section 6, Risks and Long-Term Strategy, Managing the Boom.
So the crucial point here is that while the upside of this entire build-out is obviously staggering, you can't just throw darts at a board and expect to win. Strategic risk management is absolutely essential. We have to look at the bear case neutrally because the risks are very real. There is fierce competition at both the silicon and cloud levels. These companies actually have to prove their return on investment on all those hundreds of billions in CapEx. There's also the real risk of valuation compression, meaning those high multiples investors are paying right now might shrink. And of course, there are always overarching macro headwinds to consider. So how do you manage that FOMO? Well, long-term holds, dollar-cost averaging, and maintaining a diversified portfolio through any market pullbacks are going to be your best bets.
Because remember, we are running a multi-year marathon here, not a sprint. Any market pullbacks we see in 2026, those just offer strategic entry points for patient investors. As we move into 2027, the widespread adoption of custom XPUs and AI servers is only going to accelerate. And all of that is driving us straight toward that massive $3 to $4 trillion global data center CapEx realization by 2030. It's the patient investors, the ones targeting these companies with 20 to 40% compound annual growth rates, who are truly positioned to win. So, the AI layer cake is officially served. From the foundational silicon chips at the very bottom to the massive monetization engines at the top, we have covered the entire interconnected ecosystem that is literally building the future. Now, my question to you is, which of these pillars are you adding to your portfolio right now? Dive into the comments and let me know how you're playing this multi-trillion-dollar shift. Keep learning, stay focused, and as always, invest wisely.